Good morning, everybody. It's that time of the week again where you get my weekly view on what I think the euro is going to do. The euro really reacted extraordinarily well last week, and I'm going to start you off by looking at the weekly chart and just go through a few things with you. And obviously the dollar index, I think we got to the dollar index last week. We reached highs of 99.30. And we're down, we're down a little bit. Overnight, the euro has done nothing. It's moved 15 ticks. So it's been very, very quiet. So let's have a look and see what we can expect this week. Now, you can see from this weekly chart, and I did post this to you last week, I put on what I call Carol lines, and they work. So I connected that one to that one, and then they just took in the rest. Now that line was at 109.35. Our low last week was at 109.27. Now, with markets, any market, doesn't matter what one you're looking at, you have to be aware of the algos and the stop hunters. They are there purely to trip you up. That's their business, that's their game. That's why we see major levels these days being overextended. But if you can imagine that they can only do it by 30 points, 30 pips. Okay, so obviously these days now, in this world we're in finance, you can't put your stops where you used to put your stops. So what we do, even me, is I just cut down size and I place my stops accordingly. I could be running 3 to 4 positions a week, which is the maximum I think you should hold. That gives you enough time to get to know that market that you're in and to know the levels off by heart, which is basically all we need to do. So back to the chart, back to the weekly chart, and we'll see exactly how they did it. So what they did, as you can see, stops went off, but the market recovered so quickly it was a nanosecond. So what are we seeing on this weekly chart? You can see quite clearly we're in a trend. You can see that. If I put on, well, I don't need to on this with the trend lines, but if you put on something like whatever you use, a Fibonacci, let's see what we can do here. And I put on one from there down to the low. On weekly charts you can do that. On daily and 4 hourly, you're better off picking from where the move started. So I took that one there just to give you an idea. In fact, you can take it from there, you can take it from there to there. I've just done this big one because on the daily I will show you different. So you can see this channel we've been in. You can see that continuation pattern and the break of that continuation pattern that pushed us down. Now I don't know how much of the market you was looking at last week. You can put your Fibonacci levels from wherever you want to. I find that if you're doing a weekly chart, you put them on from top to a bottom. As you go further inwards, so as you're scaling in on the daily, do it a little bit differently. On the 4 hour, again, you do it a little bit differently. But what we're doing now is we're having a look at what the market does. So, as I said, last week, you could not find a buyer at 109.90. No one wanted to buy the euro. Everybody hated it. Okay? That was not just against the dollar. That was against most of the euro crosses as well. There was a stage where euro sterling was looking like it was going to parity. I was bombarded by news. Everywhere I looked, there was negativity about the euro. That's fine. But unless it broke a certain support level, I'm quite happy to go in and buy the euro, because You know, when you're a contrarian trader, you mainly stay on your own anyway, because the whole world is against you, and that's my point. When everybody thinks the euro is going down, and you've got that trend line that goes, well, it might be, but not unless it goes below there. And algos use a 30 points bit stop loss. They're there for that reason. They're programmed for that reason. They're actually programmed, the clever little sausages, they're actually programmed to look at patterns. I mean, seriously, I nearly swore then, and I won't. But seriously, that really mucks up our life. But what you have to do is adjust. So you adjust your stops and take into consideration that at that support, that can go 30 points lower. If you do that, you'll be fine. Anyway, let's have a look back to that chart. So we've got the euro down here where it was, and you can see, I'm not sure how many of you looked at the daily. It just rebounded so much. We've had, as I said, a very tiny move overnight. Now, obviously, if you're trading the euro, you need to look at the dollar index. I mean, you just so do, because that's what really pushes the euro. Now, the dollar index at the moment is just holding above the 98 area. We're at 98.39. We're 100 points down from where we closed, or where we was last week. So really, the dollar index, we keep our eyes on, obviously, and we look at it because it's stupid not to, and it's dangerous not to. So there you have the weekly view. You can see all this overhead resistance. Even the 23.6 is too far away. So what we'll do now is we'll scale it down and we'll look at the daily. Now, our daily chart shows you quite clearly the rebound that we had off of that 108.26 area. As I said, you had to leave it for the algos to take out their little bit, and off we went to the races. Now, look at where we stopped. We stopped on Thursday at 110.85. Now, we know 110.80 was a good resistance level because we can see it quite clearly up here on the chart. So we know that that is why the euro stopped where it did, and Thursday it really didn't have a great close. Didn't have a great close Friday either. We need the close to be above 10.50. That's it. That is what we're going for. When the close, because everybody would have covered their long positions around about the 10.60, 10.70 area, okay, from 109.40.35. That's just how it happens. So where do we go from here? As I said, we've had no movement hardly at all overnight. So it looks like Asia is just as confused as Europe. But all the while that we have a base in place, oh, sounds weird, but all the while we have a base in place, we buy dips. Because technically, if you look at the stochastics and the RSI, all right, that's tipping down a little bit, but that's because we had 2 consecutive days where the market closed lower. And when markets make, for them, a good high, to close lower sends a little shudder through the trading world. To do it 2 days on the trot sends more of a little shudder through the trading world. You know, we are what can I say? We're interesting as traders, but we're not stupid, you know. We're not stupid, and we know levels, and we know where to go in, where to get out, and that is what you need to know. If you pick 3 to 4 markets and you get to know them intimately, monthly levels, weekly levels, daily levels, you will find that your trading just improves beyond your wildest expectations. because you do not need to be chopped and turned. You do not need the noise that is out there every day that will absolutely muck up your trading strategies, okay? So you do need to know intimately your markets that you're trading. So we're going through the euro at the moment, is what I've said. So let's just go back to the daily chart. Now, obviously, they're all getting spooked. No one really knows, but look at this over here. Okay, that low is at 10.27. We haven't really been below that on any big scale. And we can, if you like, go 30 points below it. So we could be having a potential, notice the word potential, head and shoulder pattern. Now, I like to preempt patterns. That's my thing, okay? So I'm going to be buying euro either down to here, and that is at 109.85. That's where I'll be buying euro. I will add to the euro down here at 109.36. And I personally will get out if it goes through and it loses 108.70. That's my stop. But for the moment, I'm looking at this, I'm going, the weekly's point higher, the daily's point higher. I don't see why we're closing down here. There is uncertainty in the market, obviously. I can't tell you any different. But you have to stick to what you believe in. And you have to make, you're either going to sit on your hands and do nothing, or you use these chart points to your advantage. And I'm hoping that over the past X amount of weeks that I've been doing this for you, you have actually got to the point where, you do know the chart points of the euro, and you are making good trades and taking advantage of it. One little thing I will slip in here now is that sterling has made a 3-year triple base. Sterling. Now, I love sterling. It's one of my favourites. And obviously that's all those years at Midland Bank trading it. But it is one of my favourites. And triple bases are very rare in a market. They are rare. But when you get them, you've got to be aware of them. You really have. In sterling, cable, British pound, whatever you want to call it, you've got a triple base that's been made over 3 years. My first target on that is 143.5. My second target on that is 167.5. Remember, it is only 2014 where we was at 170. Don't be misled that sterling cannot go back up there, because I can assure you it can. And unless sterling breaks really key levels at 1950, and I'm sure everybody is aware of it, so you give it that 30 points. Remember, you don't dive in the first time, because that stops. That's how it goes. You wait, same as the euro, you wait till it does it the second time, then you go in. Alright, so back to the chart. What are we going to do on the top side? I've given you the sterling prediction. I can say with confidence that unless we break below here, the euro overall, and when I say here, I don't mean today, I'm not even sure about tomorrow, but I am 95% convinced that the euro will trade higher. I prefer sterling trading higher, so I'm obviously looking at the euro sterling rate, which is trading at 89.85. People ask me, well, why don't I do the other way, where it's trading at 11.27? That's because on the interbank market, euro sterling is euro sterling, so it's the euro first. Don't know why, that's what they do. It's the only one that does it. We have all the rest, sterling CAD, sterling Swiss, sterling Aussie, to infinity and beyond. But for this, it's euro sterling. Please keep your eyes on that because it is extremely important. So this is our first port of call that is going to prove a real hard area to break. That's 1085. You've got the 38.2 coming in at 1111. Okay, all the 11s, but look, you've got this congestion up here as well. You've got highs where it couldn't break up above here. It did, and then it came straight the way back. Okay, so be aware of it. Be aware of that 1111. So for short term, you're buying above 1050 or down here. Here, you're looking to cover. Here, above here, you're looking to go long again for the 55-day moving average coming in at 111.68. And that little line there, which is coming in at 11.88. That's all I can say to you, really, for today. If I gave you my bigger target levels, I think you'd all go, OMG. Okay, so I'm not going to do that at all. All right, just remember these levels. They are so important. They really, really are. And they work. They worked so well last week, you know, when it was Headless Chicken Week and everybody didn't know. And if I never hear the word Brexit again, I can assure you I can die a happy woman. But it's here, Brexit's here. We've got a lot of dire stuff going on in the markets. So you need to blink yourself, okay? Chart points. What are the major chart points that are being looked at? If you get that, you are 90% there of 1, trading profitably, and 2, trading like a professional trader. Professional traders do not do 30 trades a day. We're not spot dealers. We're not scalpers. We're not life locals. All right? We've done that, been there, got the t-shirt, read the book. We are professional traders, and my job to you each Monday is to get this point across and give you the major chart points that I, as a professional trader, am looking at for not just myself, for the funds that I run, and also for customers, high net worth guys, who I advise. Okay, I hope you've enjoyed this, and have a great week, and I will catch you next week.